Hey, what's up, guys? Houston here. So Trump is trying to get people to accept this 50-year mortgage, okay? Now, many of you all may or may not know that with some banks, they offer a 40-year mortgage, right? Well, now he's trying to offer a 50-year mortgage. Now, here's the reality of this, all right? In reference to the amount of money that this 50-year mortgage will save you, let's just say on a $450,000 house, because the average house in a medium house in America, I think is like maybe 400 or 450, right? So let's just 400,000. All right. So on a $400,000 mortgage, okay, normally you would pay $2,771. Okay. I wrote some numbers down. Then that's on a 30-year mortgage. Now, on a 50-year mortgage, that's going to be $2,452. So you're averaging maybe saving maybe about $330. All right. You're not saving a whole lot of money. However, this is where it really makes the difference. All right. So you can understand this. On that $450,000 mortgage, all right, paying it off on 30-year mortgage, you're gonna pay about $830 some thousand. However, on that $450,000 mortgage over 50 years, you're gonna pay over $1 million in interest. Okay. That's an interest. So you done bought that house 3 times, not 2, but 3 times pretty much. All right. Now, here's the thing about it. With Fannie Mae, Freddie Mac, they're changing the rules in reference to having a perfect credit score. All right. No longer a 600, 620 credit score. All right. Less than that. They're trying to eliminate that because they're trying to evaluate other ways for people to have credit. All right. And so with those alternative credits, that means that you know how you have not authorized user, but your rental payments. All right. So your rental payments, 2 years of rental payments, you have to have utilities reporting. And the way that you get utilities reporting, and this is very important because a lot of people don't know this, like Identity IQ, they will report your utilities on your credit file. Plus, they will also backdate your utilities to age your credit file. This is one of the best ways for you to actually age your credit file, okay, using utilities. Now, another way is with authorized users. That's another way to age your credit file, okay? However, it has to be the right type of authorized users. Now, going back to this 50-year mortgage, there is leverage to this because let's just say you're trying to get into the real estate game as a real estate investor. On a 50-year mortgage, this is how you would play it. You wouldn't get the FHA loan. You would go after the HUD loan, okay? So by you going after a HUD loan, then you can buy some land and build a multifamily unit, okay? So now that way you have a lower payment on that 50-year mortgage. I would not go after a 50-year mortgage on a single family home. Well, you could, and then just always dump money into it, and I'll explain the hack to that in a minute. But the leverage here is basically getting a HUD loan for 50 years, then buying some land and using that loan to build a multi-family unit on it, right? And then having those other people pay for that mortgage, okay? Now you're able to, once you have that HUD loan and have equity in it, then you can actually go to the bank and refinance that and pull the equity out and build another one, because you can actually do a HUD loan every 2 years, just like a FHA loan, if you want to get into the real estate game. A lot of people, they say, well, I don't want to own real estate. I just want to buy real estate. It don't make any sense. That's the reason I continue to tell people is go get a HUD loan and build a multifamily unit. That way you can find out what it's like to be a landlord. So then, and I always tell people, if you don't pay your rent on time, what makes you think you moving somebody into a place and you assuming that they're going to pay their rent on time? It don't make no sense. So you might as well exercise that right and build a multifamily unit and see how long it's going to take for people to start missing payments. And especially like with different rental laws and stuff like that, meaning that when a renter moves into your place, what ends up happening if they decide, well, I'm not going to pay anymore? Now, you have to go through the courts. And so over the next 6 months to a year, without them paying rent, you're financially responsible for that. And you're trying to get into the real estate game. So the laws are more favorable toward the tenant than the investor. So that's the reason why I tell you, you trying to get into the real estate game, you should learn how to get a multifamily. And the best way, again, taking advantage of this 50-year mortgage if they offer, like I said, they do offer 40-year mortgages, right? But that's the only way. If you're going to do a mortgage for a single family, you might as well stick with a 30-year, okay? Just stick with a 30-year, so that way you're not upside down. And I tell you another thing, that why this may not be a good choice for some people, because that means that when you sell the house, you have negative equity in the property, and you end up owing more on the loan. So you're not walking out of that loan. You're still going to owe money when you sell the property. All right? Now, there's another thing that they're going to be looking at for this, and that's with the bank deposits. Okay? So you know how these companies out here say, oh, we can set you up with pay stubs and stuff? This is the reason why I continue to tell you guys, if you are an independent contractor or you're doing side hustles, I continue to tell you to register a business. And I told you that we can help you register the business and set you up on payroll. The reason is, if you go to somebody that's going to make up those pay stubs, they're going to be using software like Decision Logic, okay, or Plaid to verify those deposits. If you get caught doing that, you can get yourself in trouble, okay? You can get yourself into some legal trouble. So that's the reason why I tell you guys not to do it, all right? Like I said, with this 50-year mortgage, the leverage for most people, if you're an investor, is to get a HUD loan, buy some land, build a multifamily unit out, and rent it out. Okay, you have to stay in it for at least 2 years, but after that 2 years, you can move on to the next project. But at the same time, this is probably the only logical thing for it. Now, in reference to, I forgot to mention the credit bureaus that they're going to be using. Okay, so now they don't accept that FICO 10T, which is your trending scores, and your Vantage 4. Okay, those are the scoring system that they're actually going to be accepting. All right, that's the reason why I tell you guys, like, when they're throwing these numbers out, it's not to your advantage unless you actually know how to leverage. So a 50-year mortgage for a single family? No. A 50-year mortgage for a multifamily? Yes. Okay, because you're able to leverage much faster that way to not only pay the loan down, plus the revenue that you're getting paid from the other tenants, putting that money in the bank. This builds the relationship with other institutions. So if you decide you want to refinance to a conventional loan, and that's going to make you lose that mortgage principal interest, okay, that PMI, okay, that principal mortgage interest on it, right? So let me explain it so some people understand. With FHA and HUD loan, they charge you interest. They charge you for insurance, mortgage insurance, not interest, but mortgage insurance. They charge you interest, but this is mortgage insurance. So the mortgage insurance, okay, when you get the loan, They try to make it stick for the life of the loan unless you refinance. And the only way to do that is you refinance over to a conventional, in which a conventional is only charging you the mortgage in your regular interest. And then it's your choice where you want to go and get your insurance and stuff. However, when you have a government loan, they force you to pay the premiums on that insurance. Even if you still have over equity in the property, unless you refinance out of that loan, then they'll keep you in paying that mortgage interest, that mortgage insurance until the loan is paid. Sometimes, depending on how long you've been paying it, they may eliminate it. And I think you have to be paying it for at least 10 years in order for them to eliminate it off of your payment. All right. But again, the 50-year mortgage, it can be a leveraging tool for those investors that's doing multifamily unit, but for 30-year mortgage, single family, the 30-year is the best one. All right. So I hope this helps you. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.